Hello, everybody, and welcome to episode number 27 of Confessions of a Market Maker. I'm your co-host, Ray, aka All Day Ray, aka the sex symbol in the trading industry. And I'm joined here with my dapper co-host, former market maker and present-day trading educator, a man you'd want your son to imitate and your daughter to stay away from, a true chameleon who can blend in anywhere from the White House to the trap house. I'm talking about the proper villain, JJ. JJ, how's it going?
Good, Ray. How you doing today?
Doing excellent, man. I'm excited because our guest today, he started his trading career as a SOES bandit. In 1998, he founded Future Trading Technologies, which completed a 17 million round of financing. He's the CEO of the highly popular and powerful Trade Ideas, which is a real-time data mining and data technology. But the highest achievement in his life goes to that of being a judge at the Cannabis Cup. I'm talking about Dan Mirkin. Dan, how's it going?
Hey there. Thank you for the introduction. No pun intended with the highest achievement.
My man caught it, of course. Of course, Dan, I thought potheads were lazy people, not CEOs of Inc. 5000 companies. I guess there's something wrong with that narrative, huh?
Yeah, I think they got that all wrong. We control our own destiny. If you can maintain some control over the excess, then you can allow the positivity of things to come into your life. And cannabis is certainly one of those things. And I was very fortunate, I'll just tell you a quick story. The way I got into judging, it just happens to be that my best buddy from when so I'm a Russian immigrant, by the way, for the listeners, if they want to know. My family moved from Russia to America in 1978. And I grew up in Houston, Texas. And the first guy that I became buddies with was one of my dad's sons. So one of my dad's coworkers' sons. And, we just became buddies. And we kind of, obviously, when we grew up, they moved somewhere. We kind of drifted apart. And then through social media around 2010, we reconnected, and I found out he was the senior cultivation editor at High Times magazine.
Oh, wow.
and he goes by Danny Danko on social media if you want to follow him. He's a really smart guy, super cool, really good guy. And, we kind of talked about how cannabis was something that we had in common, and, we chatted, and he helped me to become a judge. So that's how it happened.
Yeah. Wow. Neat story, and talking about you immigrating, that's what I wanted to start with. Cause you immigrated when you were 8, and that was Soviet Russia. Obviously a big cultural difference. What was that? What the acclimation like for you and your family?
Well, it wasn't easy, I have to tell you, because, we came with nothing. And when you kind of go into the school system at that age, you're sort of fed to the wolves. Kids can be mean. Nowadays, the teachers sort of watch for that so you don't get picked on and things like that. But I kind of had a little bit rougher. But it also built character so that I was able to, learn from that kind of stuff. And it helped shape me for who I am today. And my parents were both very hardworking kind of scientists. And, I saw the value of education and making sure that you're not a total screw up in life. So I did my best to do that. I, went to school in Houston, then I went to college at University of Texas in Austin. And one of my fraternity brothers but his family owned Herzog, Heine, and Godold. That's how I got into the stock market. And they were the ones that introduced me to SOES bandits. They said, look, if you want to try to make money trading, SOES is the way to do it. So I didn't even know what that was. And then it turned out that Austin, Texas was like a big SOES hub.
Exactly. Back in the day.
Back in the day, yeah. Back in the mid-90s, it was New York, Austin. Beyond weird, but that's what it was. And I learned through bloody noses, that's one of the things that's so different from doing it now is that, you know, there you could only learn to get the skill set by just making mistakes and hope that you didn't burn through your account. And I didn't succeed at that all the time. I had some help, you know, to refund my account from my parents when I made mistakes.
Mm-hmm.
Luckily, I got kind of things going and slowly figured it out. And eventually that led to me, you know, so one of the other cool things is in Austin, I saw this guy, Philip Berber, start a company called Cybertrader, and then saw how that got bought out for $500 million by Schwab in 2000. So I was like, whoa, software is where it's at, because if you control the software, you control the business.
Right.
And I decided to get into the software business, moved to California. We raised money through some of the people that understood, like, you know, that I understood the game and how it was played. And, you know, that was the first foray into, you know, when I was 29 years old, and I'm 49 now, so 20 years ago. I was a foray into getting that going and trying to port the direct access kind of trading technology to the hedge fund space. And I learned an immense amount from there. You know, again, so many things that you wouldn't expect. You would think that, you know, hedge funds are just well-funded day traders, but that's not the case. You know, that's
not even close.
Not even close. I didn't understand the whole payment for order flow and all that other stuff. And you learn about all that, and you understand that there's this whole other hidden side of the game. You know,
Exactly.
When we told them that we put on trades and then hope to make money, they were like, "What do you mean hope? We like to put on trades and know we make money." I was like,
exactly.
What? Right. How does that work? Oh, through payment for order flow. Okay, I gotcha. So,
light bulb.
Yeah. So that really kind of helped us to understand that things were not always as they seemed. And as we were going through that experience, something terrible happened, 9/11.
Yep.
You know, so that happened right, you know, 2001. It was right in the middle of like one of our funding rounds. So you can imagine that things literally turned on a dime. And to make a long story short, I ended up kind of getting fired from the company that I started. They brought in a bunch of old guys because it was no longer popular to have young guys running firms. It happened really, literally overnight.
It did happen quickly.
Yeah, very painful for the ego. You know, both my wife and I were working for the company at the time. She was the 24, the brokerage manager, because we had a brokerage, because we knew that in order to test the tech, you need to have a brokerage that's trading real money. It can't just be all Q&A stuff. And the venture capital guys came in, blew all that up. They just wanted to do it old school. Eventually, I had to leave because it was just too painful. And when I left, me and my core crew, especially the tech architect, we left that business. It was called Future Trade Technologies, but it wasn't for futures. It was for stocks. It was as in the way to trade in the future.
Yeah.
And in 2003, we started Trade Ideas, and we've been doing that for 17 years, man.
That's amazing.
Yeah.
How did, because I went through tough times at 9/11 too, just to jump in, how did you manage that transition from, you know, when the VC boys came and shut you down to starting Trade Ideas?
Well, you know, if you look at our website, we kind of have a story about that. We call the whole venture space the $50 million education of what not to do.
Okay.
They're a disaster. Let me, you say no topics off topic. I'll give you a little topic. I mean, I actually think the whole business of venture capital is a scam to destroy capitalism. There you go. And I'll explain very simply. They come in, then they create every business and tell them to make shit for free. So am I allowed to say that on the podcast?
Yeah, you're fine.
Oh, yeah, Dan. Go ahead.
You're fine, Dan. Yeah.
All right. So everybody makes stuff for free. Now businesses can't compete if you're funded by, a venture capital firm that's got unlimited money laundering money that they're laundering through for other reasons. But an infinite bankroll. So they're look at Robinhood Brokerage as a perfect example to put into that, right? Who the hell would have started a brokerage and said, okay, we're not going to charge commission? Somebody who wants to disrupt brokerage. But listen, let me tell you something, man. that whole notion, if you look at the definition of the word disruption, it ain't good. You know, like, I don't know, everything's been flipped upside down. So, you know, brokerage used to make, like, you used to be able to do like a day trading brokerage where if you had like 50 clients and they were successful, you could run a really good business. I mean,
exactly.
A serious amount of money by providing service and location and atmosphere and whatever. And if you could grow that online, I mean, again, you could do really well. But the whole notion of Robinhood was to destroy all that, man.
Yeah.
They came in, they gave it all away for free. But there's another deeper, darker side to the whole venture capital bullshit that's even beyond Robinhood, is that now if you want to play the game, everybody's got to go through them and sit through bullshit board meetings and have, you know, bullshit reviews. And if you have 1 quarter of no growth, everybody gets fired, and you know, they can start over. Infinite amount of people they can put in your place.
That's true.
So again, to the tune of like what we didn't want to do, since we had such a terrible experience with venture capital and learned that I mean, again, it's a long play against capitalism. I mean, they're really trying to screw the whole game up. But that's beyond the pay grade of this podcast. I'll just simply say that with Trade Ideas in 2003, when we started, we said the last thing we want to do is raise money. Let's just start by having a business that can make income. And we grew it as a family business. You know, we started with 2 people, then with 3. It was like the tech guy and me and another buddy of mine who did sales. And, you know, I kind of did product development, and it just kind of grew from there. Now we have 25 people working for the company. Everybody works from home. We have a data center, so nobody sits there and commute. It's just a great business, you know. And the funny thing is, we're still very much like a startup, because since we never raised any money, nobody knows we exist except for us. You know, I get called every like few days. I get some emails like, "Hey, we're with venture firm da 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 da. We'd like to talk to you about some growth opportunities." I'm like, "No, thank you."
Yeah.
You know,
I mean,
that's the thing.
You gotta respect it. You stick to your guns, stick to your you know, your beliefs, and look to where you guys got. You know, I mean, nothing but respect there.
Well, we appreciate that. It wasn't easy, you know, and this whole notion of the way businesses are run today, everybody goes for this hyper growth. You know, you guys were talking about how getting captivated by Tesla. Okay, I get it. You know, it's captivating, right? Look at that thing. It was up 122 points, 15%. Okay, it's over 900 right now.
Yep.
This thing's losing $4.70 a share.
Exactly.
Okay, I just want to remind everybody a story. Okay, Tesla's another piece of BS. That's kind of like Amazon, where the people that are in charge of the game, they will allow some company to lose money for a decade, you know, until they become a monopoly, which is basically what Amazon is nowadays, right? If you're allowed to lose money forever, then how does anybody compete with that in a real business? Come
exactly.
on, I mean, Tesla just loses and loses and loses and loses. And what if you had another company that you also want to do electric cars, but you had to make money? I mean, it's impossible.
Yeah. You know, I mean, coming from somebody who people used to pay to manufacture short squeezes, I mean, it's beautifully done. You know, that whole thing with him even coming out and, you know, the whole 420 thing was just to make everybody think he was crazy and short the stock, and then they trapped everyone. You know?
Well, it's I mean, again, it is pretty crazy what goes on, and the people, and if you look at, you know, I've always said, look at the owners. Okay, I mean, if you look at the people that own Tesla, it's the same people that own Apple, that own Microsoft. It's BlackRock, Blackstone,
exactly,
Black Trident,
Blackwater,
Dirty Cube. I mean, same 5 like private equity companies that run the whole thing. So you have to really be careful getting too emotional about, you know, I'll tell you this. It's like the whole Madoff scam, right? I mean, there were people who were calling him out for over a decade.
Exactly.
He was running a Ponzi scheme. And what they get? A turd.
Yeah, Harry Markopolos.
Yeah.
You know?
I mean, they got no thanks, no glory. So being right means nothing. And so it's the same thing with Tesla. Like, look,
Yeah.
he can lose money if they want to. He can lose money for another 10 years until he puts Ford out of business potentially. I mean, that's the game.
Yeah.
That's why it's called disruption. And again, all you have to do is look at the definition of the word.
Exactly.
Yeah. Yeah, no, Dan, I like I was saying before, I can appreciate you guys sticking to your guns, and I appreciate you as like an independent thinker, not going along the lines. And, just to bring it back to the SOES bandits for our listeners, can you explain, what that is and like your guys' style of trading?
All right, I'll give you the history of the SOES bandits. In 1987, a real crash happened. Orchestrated, hashtag or not, that caused a lot of problems in the stock market. People were jumping out of buildings. I think it was still, percentage-wise, the biggest one-day drop on the exchanges, 1987.
Yep.
So when the dust settled and they scraped all the bodies off the floors, they were trying to figure out a way to punish themselves, but not really punish themselves. Okay? And so they came up with this way that retailers, that everybody had to be good for 1,000 shares on the bid or 1,000 shares on the offer. And anybody who had access to this thing called the small order execution system, which is the computer network that maintained this 1,000 minimum and 1,000 minimum on the bid and the ask.
Yeah.
If any retail brokerage had access to it through a computer, you could just press a button and the 1,000 was executed. Exactly. It was like, direct access. You had access to the offer and you had access to the bid. Okay. But in 1987, you guys will recall, computers weren't really around. Okay.
Exactly.
So they didn't really give a shit about that. It was on for 2 years and nobody even knew about it. Then I think in 1989, Harvey Houdkins stumbled onto it.
That's right.
With Alltech.
Yeah.
Good old Harvey, he stumbled onto the system, and through him stumbling onto it, and literally, I think he dropped his sub on the shift alt button or whatever, and all of a sudden found himself long at the offer, and somebody was calling him because what happened was, and this is the beauty of you guys who are market makers or
I fed market makers order flow.
So the SOES system was automatically set to refresh.
Yeah.
Like if someone hits an offer, hits a bid, it would auto refresh, and imagine somebody's taking a poop at lunch, those guys, and he's making a market in this stock. So those guys hear some news, they start hitting the offer. He just keeps repeating, boom, boom, boom. He's short 30,000 shares. It's crossed up on Instanet I'm really old. I mean,
I remember locked markets. Don't worry. This is good. This is really good. Yeah.
So there's locked and crossed, and later on we got alerts for all that. But all of a sudden, for those that don't understand, the bid was actually higher than the offer, and you got those guys jamming the offer, basically buying as much as they could. And there's another beauty of this whole point. There's another network called SelectNet.
Exactly.
Right? And SelectNet only allowed, again, market makers couldn't trade on it. Like they couldn't do it with one another. But so a retail guy through the NASDAQ workstation had to put an offer out, and then only then could that offer be taken by a market maker. So market makers, were not allowed to use SOES, so they couldn't SOES each other.
Yeah.
And then so it was really a SelectNet SOES 1-2 punch. You could hit the offer out a quarter above, and the market makers who are panicking would start buying from you, and you're making, since minimum 1,000 shares, you're making $250 a pop.
Exactly. Yeah. Wow.
So that's the whole nature of the SOES game. One of the coolest things about it, guys, is that for those that were there, and you have to be there at the right time, it kind of let you in onto the inner workings of the market. Most people today, you show them you talk about things like locked, crossed.
No clue.
No, but they don't understand. Maybe they understand mechanically, but you don't feel it. And there's a difference between a feeling and just a simple scholastic understanding of what's going on.
Exactly.
So us old SOES guys, we got to see that. We got to feel what the market looks like. It's sort of like, Sun Tzu, know your enemy. You understood the weakness of the market makers, where they were strong, where they were weak, etc. And that's how the game evolved. And we were there at the perfect time, and during that time, like from the mid 90s, like 96 to 2000, there really was an explosion of self-directed investment as all the internet stocks were going crazy and things like that, and Yahoo and all the search engines were coming to market. And there was this gigantic shift of people trading for themselves. Now, these people weren't taught the right things, and all they thought was all they had to do was buy Yahoo and forget about it and stuff like that. But it worked for a little while, and you had all these people, like the commercials where they wanted to buy the island and all those things. But the problem, of course, they were never taught risk management, never understood the downside. And when the rug was pulled out of them in 2000 and 2001, first with the dot-com bubble and then 9/11, the industry never really recovered. Everybody got so gun-shy that they just forgot that you could do it on your own.
Exactly. When they introduced PDT, the rule, the PDT rule, and they cut out all the small traders.
Exactly. Look, the game is rigged, and I hate saying it like that, but you got to, once again, you got to know your enemy.
Yeah, definitely. Did you ever think of working at Herzog? I know, because I used to trade with those guys all the time. But...
Yeah, that was never kind of offered to me per se. And I think it's partly because, I didn't want to go to New York. My buddy was going there, and I'm still very good friends with him, Stephen Godold is his name. It just was not on the radar. I was always very kind of self-directed. I wanted to do stuff on my own.
Seems that way,
so that was not in the wind for me. Okay. And I like it that way because, I ended up never working for anybody but myself throughout my whole life.
Which is pretty cool.
Nice.
No, it's pretty cool. I mean, again, it has its emotional ups and downs and a lot of scar tissue and bloody noses, but you learn from it, you become a better person. I mean, I think it makes me appreciate all the things I have so much more, my 3 children, my wife, my house, all these things that I have, they were all fought for immensely. And then there's that grounding and sense of appreciation. Exactly. And also there's the part about never having to take orders per se, although one of the reasons how Trade Ideas started, right, is because I was fired from the company I started. Board meetings, bullshit. And we realized that the people that got put in to take over, they didn't care about the customer. They just wanted to go to meetings. We still don't do board meetings. We run the company like a family. That's one of the, our customers are our venture capital. That's the beautiful thing. Yeah. People trust us enough to subscribe to us, knowing that there's all sorts of bullshit online that's for free, but you get what you pay for.
Oh, definitely. Definitely. And I mean, I've looked at your pricing isn't, I mean, you and I come from the era when your quotes were $1,500 a month, your Bloomberg was, I mean, you dropped $7,000 a month before you even made a dime,
Well, let me, you're addressing one of the biggest things that I kind of want to cover on this podcast. And I think both of you guys will appreciate what I'm saying, which is I want to convey a secret. It's all about secrets. How and why do people actually lose money trading? And I'm going to tell you the secret. When I tell you, you realize it's not really a secret. You guys all know it. Like the Glenn Fry song, "The Lure of Easy Money." It's got a very strong appeal. Okay? So look, people come in, they got a little startup capital, and they want to put that in the market and start making bank. But I explain on my, webinars that I do and things that we handle, which is when a surgeon finishes medical school, takes the boards, he does not go and operate right away. He works on a cadaver. You know why? Because You're going to make mistakes, and the cadaver's already dead.
Yep.
Ray, how many times have I used this?
It's so funny, Dan. He says the same exact thing. It's so funny. Yeah.
Well, because people that know, they know.
Mhm.
This is. I mean, if people want some value from this, I want to break down why do you lose money.
Right.
It's very simple. You start, you got all this. You're amped up. When you're amped up, first of all, that's already not a great way to trade.
Exactly.
Because then imagine playing poker or anything.
Mhm.
It's good to be confident, but confident and amped are not exactly the same thing.
Right.
From an emotional level.
Right.
So we talk to people and we say, look, guys, one of the biggest innovations at trade ideas that we've done is that within the last quarter, maybe just a little bit over 3 months ago or 4 months ago, we added full real-time simulated trading. And simulated trading where you can do automation, hybrid, practice P&L management with real-time data. And I say to people, look, if you can't take 12 months and literally practice every day, not lose money, but gain a skill, then you might not even ought to be trading in the first place.
Mm.
It's about the delayed gratification.
Right.
Totally.
Do you want to make it last? If you want to make it last, delay the desire to dump your load right away.
Mm-hmm.
Exactly.
And I think, regardless of shorting or going long or all the things that people say about holding on to losers or whatever, it all really boils down to you. If you don't practice, it's like pro golfers, they spend an immense amount of time at the range. If you don't practice, you're not going to get better. And we have the best practice tool in fintech. I mean, that's the thing I would say to everybody. If you're talking about what really differentiates you, aside from the way we do data and the data mining and the fact that our AI, helps people find amazing opportunities, both long and short. And I was giving this example. So today, one of our AI calls that happened like 15 minutes after the open was a long on YRCW. I don't know if you guys have your
yeah, let me pull it up here.
So we bought it at the AI, which is one of the things that we invented. That is the only system by any vendor that's a calling system. In other words, our software makes calls.
Okay.
And manages and helps you manage the risk.
Mm-hmm.
So at 6:46, it said to go long at 2:35.
Nice.
It went as high as 271, and from that perspective, that difference is better than Tesla's move percentage-wise.
That was a beautiful chart too, and nice smooth price action.
Well, that's the whole point, is that we're using statistical analysis to try to key in on that kind of information. By the way, the second best trade that we had, right, was now this one was a little trickier because it did a reverse, but just again from the point of view as a short of Easy Pawn, okay, at 547. So this was done at I'm looking at 650, so 20 minutes after the open, and it really just dropped right there, like very quickly in the next 20 minutes. Beautiful. You could have, again, profited a nice 8-10%. Then it popped back up, but then after it went like just halfway, you never got stopped out. Our stop was at 598, and all the stops are also auto-generated.
Oh, really?
Yeah. So again, we're trying to do everything. We're trying to make sure that you get the entry, the risk management, the whole thing. So right after that, it just continued to go lower and lower and lower and lower, and finally closed out at 504. So from 547 to 504. So both long and short, you get, and again, sometimes the stocks are small. Sometimes they're, there was a long play on J today, so $95. At the same time, you have something for $5. It's just about statistics for us.
No, it's really interesting. The funny thing is, I started looking at equities on profile because I've been trading futures for about 6 years solid now. And I just started getting back into equities, and Steve sent me, he gave me some targets, some of your picks from the scans, because I said, find me something that's got good institutional ownership, high number of trades, and jumping over VWAP. And some of the stuff that the software spit out was just beautiful price action, like ADAP and TRIL and all this under $10 ever since they got rid of the wise guys in the mob, and they've replaced that under $20 NASDAQ with the guys from Harvard and cleaned it up. The price action is luxurious.
And it's not just simply about day trading too. I'm going to give you an example. On like around October, like right on Halloween, the software picked a long BBIO at $20, like $20.95, and literally from that day on, it just plowed forward all the way up to 48.
Yeah, that was nice.
And it's still way up from the original call. So we talk about the fact that we create swing guidelines, day trading guidelines. I almost don't like the term day trading because it presupposes there's some magic in getting out at the end. But the truth is it's all about risk management, right? Exactly. And what you can handle. Yeah. Sometimes you cannot out day trade a momentum when it's going in your direction. Like that BBIO, you wouldn't want to be in it every day. You would have just wanted to be on the ride.
Yep.
And that's the thing that we try to focus on, which is, if you look at our software, we try to take the best of the stuff that's difficult to do, but then simplify it. We sort of have a Netflix-like channel bar where people can pick what they want to see. You can get very sophisticated in terms of what it is that you want to do. Like, if people are experts in Adobe Photoshop, they can get gnarly at it. Same thing with trade ideas. But if you just want to cut and paste, and there's nothing wrong with that, you are able to do that with our software. Everything's already pre-done. So once again, you don't need to spend all of your time under the hood. You can experience the Tiptronic without knowing, how all the shifting is done.
Exactly. Oh, that's cool. That's cool.
So Dan, I mean, their ability, I would imagine, because I'm a little bit familiar with your guys' software. Steve has shown me like how he back tests and like the scans he does himself. Now I would imagine, are there problems for the subscribers learning how, because it's so intense? I want to say so intensive, but there's so much you can do with your guys' software that they run into problems. They're kind of like, I don't know how to use it. I don't know if I'm making sense.
No, you are making sense. And that's always the biggest problem of software that's powerful, is that you run into, you got the guy that's not very experienced that wants to, race the Ferrari, but he doesn't even know how to shift gears.
Mm-hmm.
Our solution to that is, and I hate to use the example of Tesla, but it's kind of like the auto driving. So that's what the AI is doing. Mm-hmm. So the AI that we have, it's giving you entries, it's giving you risk and exits. It's doing everything. So the question is, can you follow it? And actually, you can follow it in two ways. You can fully automate the AI so that it trades for you via interactive brokerage, and it'll trade for you live.
Mm.
Okay?
Wow. Mm-hmm.
You can automate it in simulated trading mode, which is another thing that is key. So you can figure out how that all feels. What is it like to be in a bunch of positions at once, etc. And of course, you can just cherry pick. You can say, okay, well, here's a trade. I think I'll take this one. I don't like that one. I'll take this one. And everything is structured for you. So there's the only way you can handle having this kind of software and not having people be overwhelmed is a continuous education curriculum. And we have that all throughout the week. We have webinars. We have a YouTube channel that's populated with every aspect of the software, from turning it on to making windows. So you can just do it on your own time if you wanted to. But if you need the classroom setting, there's that. And there's also a live trading room that we have that we host. A gentleman named Barry Anderson hosts it. And it's kind of both meritocracy of good users who, not all of whom are our customers per se, but just who interact with our software. And window shoppers who are looking around, and then this core group of solid experts that share not only just how the software works, but how they implement it to make money.
Right.
So we kind of have it all.
I just want to give a shout out to Barry. I've been into the room. I really like Barry's style of trading, and just him in general. I just like his he's like a no nonsense type of approach.
Absolutely.
Which I appreciate.
And we want to promote that. We want people to gravitate to the kind of trading that makes sense.
Right.
Exactly.
And
Yeah.
Barry is relatively easy to follow, and he does a lot of AI plays. And the funny thing, is, guys, we really, there's no end to the innovation cycle. I mean, we're about to add chart-based entries and exits so that everything you see, you don't have to like right click or execution panel. You can literally drag your buy and sell points to the chart. And
Oh,
once it
really?
gets there, it'll execute, and stops are automatically set for you.
Wow. Wow.
And let me tell you the biggest thing that we're doing. Okay. We're going to be doing kind of like a DraftKings thing, but with the stock market. You know that right now you can play Fortnite for money in tournaments.
Yeah.
Okay, or Quake or Gears of War or whatever, multiplayer.
Right.
So we're going to be doing that for trading, and we're going to have cash prizes. And one of the ways that we're doing that is like you have to eliminate all luck out of it. So like if somebody is in the Tesla situation, anybody can only get a small percentage of a gap up.
Right.
So, you know, if something's gapped up like 30% in one day, everyone gets to 5 of that 30, and then you have to trade the rest. And the more you trade, the more kind of points you're acquiring, so that you're doing more and more positive things. And the best part about this is that the skills you're going to learn in these tournaments are actually skills you're going to apply in real life and real life trading.
Yeah.
Whereas Fortnite, that does not really help you in real life.
Yeah, that's interesting.
That's
you know, Dan, that's something I've always thought, because, you know, I'm a poker player, and I always thought, I'm like, why doesn't trading have more like competitions, or, you know, of things of that nature? I thought that'd be, you know, interesting. So I like that's where you guys are.
If you go to our website, you can kind of scroll down past the first page. You can see, you know, first quarter, we're going to try to do first tournament. You know, there's some legal hurdles you have to make sure you're crossing so that you're not quote unquote gambling, but to us, it's the same exact thing as video game tournaments, which is a very big business.
No, absolutely. And it's just growing. It's continuing to grow.
Well, it's continuing to grow. The real key is getting rid of luck. And we can do that programmatically, like I said, by making sure that you can't just win with one trade and getting lucky. You can do that in real life, but not in a tournament. And then same thing about, you know, the gap ups. If something that you're in accidentally gets bought out, and that's the only thing you do, you can't win that way.
Oh,
You've got to
consistently. That makes sense.
Yeah, and that's it.
That's interesting.
So those are the whole notion of simulated trading that we're bringing to the table. It isn't just only. I mean, number one, you should be practicing. We have the best practice tools, but we're also going to reward those that are doing it the right way with actual cash money. So,
Dan, let me play. I want to, just because this is just what I thought of when we're talking about the tournaments, right? I want to play devil's advocate to the luck factor, right? Which I think make poker tournaments popular, or just maybe poker in general, is that anyone can win on any given day. Right. So well, the recreational player can play with the pro and beat them for a day.
Right. The problem is poker is gambling. It's not you have to, for what we're doing, you have to be like a video game, where a video game, you know, like Quake, you can't win on.
Oh, because you got you. Okay. Because, all right. I understand now what you're
That's
saying.
why.
Yeah. Because
and again, that's just the legality, but it really does help get you to the right place, because luck is great, but you don't want to be counting on that.
Exactly.
Oh, absolutely. No, I was saying from I was looking at it from like a growth standpoint.
Oh, sure.
You know what I mean?
Oh, okay.
But cool. So Dan, how active are you as a trader? You know, now that, you know, businessman running this company, you still pretty active?
I do trade, but I'm not as active as I used to be. I do a lot more like swing position trading. And that's only because, you know, you guys have to appreciate the fact that you can't be a one-legged ass kicker.
Exactly.
Yeah. Yep.
Exactly. Yeah. Very true.
And also I get like, when I do it, I kind of go all in.
Yeah.
Meaning like you can't just turn that passion off. And when you're doing that, then you're not really helping to grow the business, thinking outside the box. And I'll give you one example. You know, we've got people that have been with us and are still subscribers since like 2003, 2004. And they still use versions of our product that are like over 8 years old. If something works, you don't fix it. You know?
Oh, that's good that you have like that legacy product. That's really cool.
Right. But for me, I have to, like, it's almost like I have to lose to see where I can add value. Do you see what I mean?
Yeah,
Right.
I
The best way to
understand.
lose is in simulated mode.
Yeah.
Right.
And the other thing that I was going to mention is, like for example, that BBIO trade
Sure.
on a swing. I mean, though, there's one thing to trade in the day time frame. I don't call it day trading. I call it the short term or day time
Sure.
frame. But there's another thing. Trades like that are real wealth builders.
Yes.
If you have a few of those, you exponentially build your wealth. Basically in the old days, the way I worked in my world, you'd find a group of people who had a deal and you knew they could move the paper. So you bought into their deal. So your software is kind of going and doing that, using science. It's pretty
That's right.
cool,
We're psychologically trying to derive psychological supply and demand mathematically
Exactly.
through mathematical behavior.
Yeah.
But I love what you're saying there, because I mean, this is the reason why I'm doing this podcast, why you guys are in the game, why we're doing what we're doing. Let's back up for a minute and talk about the big picture. Okay. You can't sell a house in the morning buy a house in the morning, sell it at the end of the day and make 30%.
Yeah.
With the costs and what it does. There's no place other than the US stock market where you can build wealth with the kind of risk profile that exists, where the spread is almost nothing and you can actually be liquid. I mean, you can trade with things like Microsoft, right? Or Apple. I mean, you can trade tens of millions of dollars worth of stock.
So liquid.
And make percentages on them. And you can do that from your own home, without any warranties and inspections. And
exactly.
So, people talk about flipping real estate. Get the hell out of here.
Oh, yeah, exactly. I don't want to carry a hammer, I mean,
you can't compare. I mean, in the stock market, there are so many names, so much return that you can access. Whereas with real estate, I mean, you are stuck. Not that real estate is bad, it's tangible. I'm not against that. But I'm just saying that you can't compare the liquidity of the US stock market.
Oh my God.
In my opinion, to anything in the world, because once again, unlike even the bond market, right? You've got like the smaller names that can trade 20, 30 million shares and move up 40, 50%.
Yeah.
And we've seen that over and over again. And it'll do it both ways. So you can ride the up and the down if you're an astute trader and you learn the skill.
Exactly. I mean, I always marvel and I tell people that the machine that has been built that are these US markets they're fascinating. They're stable, price stability, beautiful order flow. People don't back away from bids. It's regulated. You can't ask for anything.
You can't beat it. It is the best that there is. And they, whoever they are, do as much as they can to prevent people from seeing that that's possible, which is, again, goes back into the whole Robin Hood and the whole buy and hold bullshit.
Yeah.
And I'll even give you, again, talking to the tune of where I think the world will head soon, is that, I honestly believe the tax situation is the other thing that keeps the investors out of the stock market, because this whole notion of capital gains and long-term gains, it's inverted. If you're adding liquidity and doing a lot of transactions, your rates should be smaller. The more you trade, the less taxes you should pay, because you're providing liquidity to the market.
Okay. That's true.
You make one trade. Why do you get the benefit of that? Why? Well, because they did it for you. You gave everybody, like, think about our 401ks. It's like, oh, look, 401ks are doing great. Can I touch it? No.
Yeah.
Why? Because I'm stupid. You're stupid. Don't touch your money.
Yeah.
So that all of that inversion, I think, I'm very hopeful that will be changed to the logical way. Is that, again, supply and demand. If you're providing liquidity, if you're trading a lot, you're actually adding to the market.
Exactly.
Not making it worse.
Exactly.
And the more liquidity, the better it is.
Definitely.
So you should be rewarded tax-wise for that. When that happens, then you're going to be the wealth. Like if you talk to any wealth manager, you know what they hate the most? Trading.
Yeah, oh, definitely.
I'm in. I can't sell your stuff because, taxes.
Yeah.
What is it? What world are we living in? It's like some sort of weird matrix.
It is. It really is. I mean, you look at some of these companies, you look at Apple, Microsoft, less than 1% of their float trades on a daily basis.
Well, yeah.
They're like all the stocks locked in somebody's desk drawer,
Yeah.
while BlackRock, Blackwater, and those
Every
guys, right?
black cube, stone, and trident, and that's it.
Yeah. And we're not that we have anything bad against us. We don't want to die in our sleep tonight,
Mm.
but
On the black helicopters. Is that another fun? Black helicopter. But it is all real. It's like the best opportunities are in the stock market. Most people don't do it because they've just been brainwashed to believe that they're too stupid. And again, they've been taught to not think critically and manage risk. If you're in a stock and you're not up in it, well, you're down in it and holding it. I mean, to a certain point you can, but if you're continuing to lose money, well, no, that is not a good risk behavior,
Yes, exactly.
So, I mean, that's the one thing I would say that working with our tech teaches people. It's risk management, consequences. And just like going back to the cadaver and making a full loop, right? The surgeon learns on a cadaver because it's managed consequences. Exactly. You want to learn in simulated trading. You want to be very active on the range, right? Mm-hmm. So that you can see what feedback. Why are you slicing? Why are you pulling your golf shot? What's going on? Are you not moving your hips? These are all things you got to know. That's what we teach you in our simulated trading.
Yeah, wonderful.
Beautiful, beautiful. All right, we just got to take a second to shout out our sponsor, official sponsor of the podcast, Traders Creed, the best collection of stock market T-shirts, apparel, and gifts out there. Perfect for traders. At traderscreed.com, they provide quality products that are ethically sourced and incorporate humor and wit into each design. Imagine your favorite stock saying or impression on a nice shirt, mug, or bag. Check out the many designs at traderscreed.com. So Dan, I see there's a lot of excitement around this small exchange, and I know you guys are maybe playing a role in partnering with them or something to that extent. Is that something you can speak on?
Absolutely. We did our event in October that we usually hold annually, our Traders Summit kind of event where various people come in and speak to us about what they're doing. And Small Exchange is one of them. I really love the idea of being able to have their branded futures type product integrated into our system, giving people just, that's again going back to the pattern day trading rule, giving them more access to leverage their capital. We're continuing to work with them. As you know, new products, there's always like stuff going on at the exchange level, at the data level. But I think very like within the quarter, something will happen. There'll be some sort of release where Small Exchange will be a part of what we're offering.
That's wonderful. And are they now? I've been watching Tastytrade. Tastytrade actually was very beneficial to me because when I went from institutional side and the deal side to being a retail trader, I had no idea what the heck I was doing. And I always say institutional trading's like being at a nightclub where all the beautiful women like you, and retail trading's like trying to cross a freeway wearing a towel. So I fell into Tastytrade, and I was immediately, I learned about market profile with those guys, with Peter and Brad, and I really appreciate how Tom Sosnoff and those guys have put that together. That's a really a lovely platform, and it's a great resource for retail traders.
Well, they had a lot of success with Thinkorswim. Same group of people. They're still passionate about it. They made a ton of money selling Thinkorswim to TD Ameritrade. And, now Thinkorswim is going to be an interesting situation since TDA is bought by Schwab. Yes. You got to imagine that the whole innovation cycle is going to be ground to a turtle halt. So hopefully that'll just be more room for players like us and them to innovate and help people see that there's so much more out there. Ultimately it's about embracing the freedom that comes with making your own decisions in the stock market. It's, it'll bring your dark side or your light side, and we want to go from dark to light.
Mm-hmm. Definitely.
Excellent.
And will they, are they going to have something similar to like a micro futures product? Is that their?
I think that's the point.
Okay. Yeah, that's the point. Okay.
And I think that's the big thing that they're going
Okay.
for. So
Interesting.
I'm they're very nice guys, and we like working with innovators. So hopefully, it'll just all jive in when we release it. But I hate saying anything ahead of time, because again, with technology, you know, you never exactly know.
True, and regulation too.
Yeah.
Yeah. So, so then it's not often I get to talk to somebody who was a judge at the Cannabis Cup. So yeah, I got some questions revolving that, it's something I, followed even since high school, man. You know what I mean? Like, what was, just describe to me the experience. Cause I even thought, like, as a judge, I mean, like, how stoned, like, how are you going to judge different strands? It's like, how stoned do you
Great
get? Like, how do you know what, you know what I mean? That's what was my first, go ahead.
So I asked the same question when I was first asked to judge, and they say, judging, you got to bring your crew with you. So I'm the judge, so the judging comes from me, but you bring your homies with you. Because there's so much stuff to judge. Again, people were taking knees, if you know what I mean.
Yeah.
So yeah, it's a we effort, because one dude, you're going to be like, shredded in 10 minutes into it.
Right.
And you have a week to judge, like, I think sometimes like 20 things.
Uh-huh.
So it's it's an awesome prospect, and very humbling, because again, because the questions are good, because guys who are doing it are very astute at the various different things, but it is very subjective.
Right.
So everyone has their own take on it, but you got to just kind of I'm sure it's very similar to wine. Ultimately people ask, so what does this wine taste like? It kind of tastes like red wine to me. So they've got all sorts of calibrations, and you pick up your judging. It's a kit. You go out, you pick up a judging kit and everything. There's a judging software, and then you plug it all in after you and the boys hit it.
Mm-hmm.
Really? Oh, interesting.
Cool. Yeah, it's us East Coast guys. We've always been a little jealous of you guys in California. It's like the epicenter out there. What's your favorite strand? Do you have a favorite strand?
So my whole personal take on that, for me, it's more like not strain per se, but I'm more of a sativa kind of guy than indica, because I want to be more alert.
Sure. Yeah.
I don't like to have a favorite strain, because then it's sort of, then you're always going to be sort of looking for it.
Sure. Sure. Like kind of like pigeonholing yourself almost.
Right.
Yeah.
So I try to be very, very open, and not be like stuck to any one thing. And and the branding's also like, so many people name stuff similarly.
Yeah. Right.
There's OG Kush and Granddaddy Purple, and then it keeps going and going and going. And you're like, sometimes you're like, wait, which one is this? They sound similar.
Yeah.
So I would say, do you like indica, sativa, or hybrid? And I'm more of a sativa hybrid.
Okay, sure. Now, what's your take on like the flower versus the like the vapes?
Man, great question. I mean, the vapes are an amazing convenience.
Yeah.
So I was vaping a lot. I mean, they don't get you as high, which is, to some extent good. But of course, they're tempting to hit all the time, because it's easy and there's no mess. You're not hitting there lighting lighter, and it's because the mess is less. There's just more opportunity to do.
Yeah.
So I like both, and.
Oh, we lose you, Dan.
Yeah, I think we lost him.
Oh, let's see if we could try and get him back here.